आप बोलिए। हाँ, शायद करेंगे आप। हाँ,
IT team, may I request to mute everyone's. Shobhaji, should we go?
Yes, we should start.
Namaste. Respected Poonam Sharma-ji, President FICCI Flow, esteemed Speaker CA Pramod Jain, members of the Presidium and governing body, and my dear participants. Good afternoon and a warm welcome to our today's virtual session, Compliance to Confidence, Essential Knowledge for Business Owners. I am Usha Rani Manne, National Governing Body member, past chairperson of Flow Hyderabad chapter, and currently heading Flow Women Directors Initiative. Let me begin by sharing a real and recent experience that shaped the intention behind today's session. As the lead for Flow National MSME Awards 2024-25, I had an opportunity to call for nominations for the awards. We received nearly 150 nominations from across India, from incredibly enthusiastic and passionate entrepreneurs within the Flow community. But here is the catch. Despite their drive and accomplishments, only 25 out of 150 applicants could be shortlisted. Why? Because we had asked for just 3 basic eligibility criteria. Number 1, MSME registration. Number 2, statutory balance sheet and profit and loss account certified by a chartered accountant. A minimum 51% of ownership in the business. Surprisingly, many members, though brilliant in their work, were unaware of these fundamental requirements. This is not due to lack of effort, but a lack of exposure to the compliance side of running a business. This session is our humble attempt to bridge that gap. And this course is not just intended for already well-informed directors or business owners, but for the many driven, capable entrepreneurs among us who are ready to grow but need the knowledge to do so professionally. In Flow, we are blessed with vibrant pool of entrepreneurs, creators, innovators, and risk takers. But for their businesses to scale in size, revenue, recognition, or funding, they must evolve into professional, compliant organizations. Whether to attract top talent, approach funding institutions, or lead responsibly, understanding the statutory obligations and reading financial statements is very, very essential. That's exactly why, under the Flow Women Directors Initiative, we have designed a quarterly learning series to help women entrepreneurs confidently build this base from understanding compliance and governance to reading profit and loss, balance sheet, and cash flow statements. And who better to guide us on this journey than CA Pramod Jain, a celebrated valuation professional, independent director, and a renowned speaker. He has over 3 decades of experience transforming businesses and mindsets with clarity and compassion. When I invited him to speak today, his immediate response was, "I'm happy to contribute. Let's make knowledge accessible." We are grateful for that spirit, sir. So here we are with the first of many meaningful sessions that we hope will empower each of us to make better informed decisions for our businesses. Let's make most of this opportunity. Before we proceed to this session, I would like to share an exciting announcement. Under the Flow Women Directors Initiative, we are proud to launch our first batch of Independent Directors Masterclass. In collaboration with Institute of Directors, IOD, India's most reputed institution for board training. This 5-day virtual program is specially curated to prepare women for board level roles with structured governance education, deep financial insights, and boardroom ready skills. The dates July 20th, 21st, 22nd, 28th, and 29th of this year. Our first batch is almost full. Please reach out to our team to register for the next batch. May I request IT team to show the slide for the information? Yeah, you may take screenshots. Thank you. IT team, enough. Thank you. Yeah. Now it's my privilege to introduce our National President, Ms. Poonam Sharma. Poonam Sharma is the 42nd National President of Wikiflow and a distinguished entrepreneur in the health and wellness sector. A global advocate for Ayurveda, she is closely associated with the Baidyanath Group, a pioneering Ayurvedic brand with a legacy spanning over a century. As the founder and director of Ayurvedant and Mantra Herbals, she has been instrumental in promoting the benefits of Ayurvedic medicines, tonics, and cosmetics worldwide. Beyond business, Poonam is deeply committed to women's empowerment and social welfare. She leads the Viranga Foundation, which focuses on uplifting women in Bundelkhand by providing skill development, medical aid, and healthcare services to underprivileged communities. Her philanthropic work reflects her passion for creating sustainable change and fostering self reliance among women and children. Hailing from a family with deep roots in business and politics, Poonam was raised in an army background, which has instilled in her a strong sense of discipline, service, and responsibility. She actively supports special needs children in Jhansi, organizes charitable healthcare camps in rural areas, and conducts medical aid programs for police, paramedical, and paramilitary forces, a tribute to her armed forces upbringing. Despite her extensive travels and leadership responsibilities, Poonam remains deeply connected to grassroots initiatives, ensuring that her work translates into real impact. She firmly believes that privilege comes with responsibility, and through her relentless efforts, she continues to empower individuals, strengthen communities, and drive meaningful progress for a better future. It's now my privilege to invite our dynamic leader, Poonam Sharma ji, to address the gathering.
You have to unmute yourself.
You are muted, Poonam ji.
Thank you, Usha ji, for such a nice introduction and your warm and kind words. And namaskar, very warm welcome to all of you. It's an absolute pleasure from my side to be addressing this special session under Flow Women's Director Initiative, an initiative which is very close to my heart. And why I say it's very close to my heart, because I really feel the lack, like Usha ji had said, that work is there. I've been working in industry, I have my own businesses, but somewhere something was lacking, and this is what it is. And we are trying to make a change. Everybody knows that we work at 3 levels of society in which we work for the underprivileged and women, and we work for the middle class, and we work for the upper echelons of society. And of course, even the upper echelons of society, even if you have everybody doing work for you, it's very, very important and an imperative to understand the workings of women directors, and it's very important thing to do. So I'm very thankful for you from my side towards you all that you are conducting this course. So our national initiatives are testimony to this vision, that ranging from whether we do digital skilling, entrepreneurship, MSME assist, sustainability, environment, everything. There are lots of them, the policy part of it, and of course corporate women in direct training courses to basically map the growth trajectory of women. And together we come to this conclusion at the end of the year and year after year. So today's session, Compliance to Confidence, could not be more better timed or relevant. Whether you are a startup founder, part of a family-run entrepreneurship, or serving on the board of a private limited company, understanding governance and compliance is mandatory. It's not optional. It is a foundation of sustainable business successes and ethical leadership in an increasingly complex business world. Compliances protects not only your organization, but also your personal credibility and trustworthiness. And for women leaders stepping into the boardrooms and leadership roles, this becomes very, very crucial. And we want to see all the women from classrooms to boardrooms sooner than later. And I'm delighted that today we have today with us CA Pramod Jain ji, a highly respected valuation professional, independent director, global business coach and author. His experience and approachable teaching style will undoubtedly make today's lesson both enriching and practical. Thank you, Pramod ji, for being here with us and taking your precious time out and giving us your valuable lessons. I would also take the opportunity to thank the efforts of our women directors team, Usha Rani Mane with co-chair Shobha Jolly, Sujita Reddy, Neha Reddy for crafting out such an eventful and impactful session. Thank you so much. And as we begin, I encourage all participants to immerse themselves fully in this learning process. Ask questions, take notes, feel free to understand what you're not understanding. And then let us move from compliance to confidence and from confidence to influence and leadership. Thank you. After we mute this, we can begin the session.
IT team, please mute everyone except the speakers.
Usha, should I?
Yeah. Thank
Somebody
you
doesn't
so much,
realize,
Poonam,
so
for
can-
your inspiring words, for your continued support and leadership that guides all our
Absolutely.
initiatives with such clarity and purpose. Now I invite Ms. Shobha Jolly to introduce our guest speaker today. Over to you, Shobha.
Good afternoon, everyone. I'm Shobha Jolly, GP member Flow. Today, we at Flow are very honored to have Mr. CA Pramod Jain with us to enlighten us on a variety of very pertinent topics in the field of business that as a director, one should have a deep knowledge of. Mr. Jain is a renowned valuation professional, independent director, global business coach, and corporate trainer with a vast experience of more than 20 years of rich corporate engagement. He has been a finance and legal head and company secretary and has additionally authored two very popular books, Finance for Value Creation and You Are a Born Winner. He is currently practicing as a chartered accountant, insolvency professional, and business valuation profession based in Pune. Thank you, Mr. Jain, for being with us here today. Over to you, Mr. Jain.
Before Jainji, just a minute. May I request IT team to kindly felicitate our esteemed speaker with the green certificate, a symbol of our appreciation and our
Yes.
commitment to sustainability.
Yes.
IT team. Okay, IT team. Okay, sir. Pramodji, please. I request you to start our session today.
Sure.
And so, sir, do you, I mean, your presentation, do you want the screen share to you?
Yes, I will.
Yes.
I can be given the host rights,
Yes.
and then I'll share my
Yes, sir.
PPT on these
Yes.
for the benefit of everyone.
Just give us 1 minute, sir.
Sure.
IT team.
I think I already have these rights, so no worries.
Yes, the green certificate has arrived.
Thank you. Thank you, Pramodji. IT team, can you please give screen share to Mr. Pramodji?
Yes, I have the rights, Usha
You
ji, so
have
no
the
worries.
rights.
I will
Okay,
have
great.
yes, yes,
Thank
okay.
you. Yeah.
Okay, Shobha ji, thank you so much for those kind words. President Poonam ji, Usha ji, Sujita ji, Neha ji, and all dear participants for this wonderful program. I'm sure all of us at the end of this program will really have that confidence for which this program has been organized. And I would really like to compliment. I was listening to all of you, Poonam ji and Usha ji and everyone. It really gives me a very good feeling, very positive feeling. The whole the our Prime Minister's vision of women empowerment. I can feel that women empowerment. When I am sitting in this program with every one of you, and that's really fantastic and phenomenal. Before I begin the program, I would like to tell all the participants. Uh, a lot of people have this myth in their mind. उनको लगता है कि finance is very difficult to understand. और अगर मैं आपसे कहूं कि दुनिया में सबसे आसान कोई चीज है समझने के लिए, सीखने के लिए और लाइफ में अप्लाई करने के लिए, तो फाइनेंस है। पैसे की भाषा है, सबको समझती है, पढ़े को भी समझती है और अनपढ़ को भी समझती है, बल्कि अनपढ़ को और ज्यादा समझती है। So, and then there are examples. If you see the best of the finance brain that ever existed on this earth or are existing on this earth, they never had any formal qualification in finance. Dhirubhai Ambani, we all know, is not a chartered accountant or an MBA or a CPA. Bill Gates, who is the richest man on the earth, he is not a chartered accountant or an MBA. So it is not necessary at all to be good, to have a formal qualification in finance, to be good in finance. Basically, what we need is the right kind of attitude. So with the right kind of attitude and little bit fine tuning in terms of understanding, the finance comes automatically. As I always say, finance is less a matter of knowledge, it's more a matter of attitude. So once you have the right kind of attitude, then the knowledge will come automatically, and then you will emerge truly as very successful businessmen and business persons, and also enter into the board of directors of different companies, which I am sure many of you are there already. This program is going to be a series of programs, as Usha ji has mentioned. Maybe this is the first one, maybe we have 2 or 3 more, so as to complete the entire course curriculum that we have. मेरी कोशिश इस प्रोग्राम में ये है कि आप सभी को ये पूरा प्रोग्राम अटेंड करने के बाद लगना चाहिए कि भाई जो भी फाइनेंस में सीखना था और कंप्लायंस में जो सीखना था या बिजनेस में सक्सेस हासिल करने के लिए सीखना था, आई थिंक एवरीथिंग वाज अवेलेबल टू यू इन दिस प्रोग्राम. दैट इज हाउ इज गोइंग टू बी माय एंडेवर. Secondly, it is also going to be my endeavor to keep it as simple as possible, so that you do not have the fear of understanding the jargons and things. और मैं आपको बताऊं कि जार्गन जैसी फाइनेंस में कोई चीज नहीं है, बड़े आसानी से समझ में आती है. आई डेफिनेटली वांट टू मेक इट इंटरेक्टिव. तो जो भी मैं आपके साथ में टॉपिक डिस्कस करूंगा, चर्चा करूंगा, तो उसके बाद में बीच बीच में आई विल टेक अ पॉज, एंड वेयर आई विल मेक इट ओपन टू एवरी वन ऑफ यू. सो अगर आपके कोई डाउट्स हैं, कोई क्वेश्चंस हैं, सो मे बी आई कैन रिक्वेस्ट उषा जी to read out the questions and the queries which all of you may have posted in the chat box. So I will respond to those questions and queries, and then we will go to the next step. और मैं आप सभी को बहुत ही स्ट्रांगली एनकरेज करूंगा, रिकमेंड करूंगा कि देखिए, ये प्रोग्राम का ऑब्जेक्टिव ये नहीं है कि somebody from Pune called Pramod Jain comes and delivers a program, he goes his home and you also go to your home. That is not the objective. Objective of this program is that you should feel confident, you should feel wow, what a program has been delivered to us. And उसके लिए एक ही चीज जरूरी है, वो ये आपका एक्टिव पार्टिसिपेशन, आपका एकदम एक्टिव पार्टिसिपेशन। आपके जो भी डाउट्स हैं, क्वेश्चंस हैं, प्लीज डू नॉट वरी अबाउट एंड डू नॉट हैव एनी हेजिटेशन इन योर माइंड. Raise your doubts, raise your questions, and I would always be very happy to respond to them. And that is what the purpose is. So our objective is not to complete the entire thing. Our objective is that you must feel that yes, this is what I have been wanting to know for all these years. Thank you, Usha ji, that you have organized this program. Thank you, Poonam ji, that you have organized this program. And now we have all the necessary technical know-how and knowledge available. So I'm just going to start sharing my PPT, and we will go with that. And I'm sure, are you able to see my presentation? Anyone can please confirm?
Yes, sir.
Yes, we can.
ओके,
Yes.
एक्सीलेंट एक्सीलेंट, ओके। और मैं आपसे ये भी कहूंगा कि अगर आपको कभी लगता है कि मैं बहुत तेज जा रहा हूँ या बहुत स्लो चल रहा हूँ, तो बिल्कुल आप मुझे बताइए, एंड आई विल एडजस्ट माय स्पीड अकॉर्डिंगली, राइट? एंड सो लेट मी स्टार्ट फर्स्ट, हाइड दिस control panel. Okay, so here we start. What is the objective of this program? Objective of this program, number one is to understand the key responsibilities of company promoters, directors, and business owners. The idea behind discussing this is to ensure that all of us are on the same page and all of us have a very clear understanding as to what should be the drivers of the promoter, the director, the business owner, and what have driven truly successful business people on this earth, what have driven them. And so to understand that, then we will talk about clarity on what compliances means and why does it matter. Thereafter, we will discuss practical tips to stay compliant and confident. And the whole idea is to have a solid foundation for advanced topic, because as Usha ji was saying that you have already planned a session in July, and that's where you all are going to, or those of you who have registered for that program are going to undergo a program of independent directorship. तो उसके जो topics हैं उसके लिए एक base तैयार करने के लिए, that is also what the objective is. अब ये जो पूरा प्रोग्राम है, मैं आपको बता दूं कि हमने इस प्रोग्राम को 8 मॉड्यूल्स में डिवाइड किया है, और मुझे लगता है कि हम ये पूरा प्रोग्राम 3 सेशंस में कवर कर पाएंगे, यानी कि 2-2 घंटे के 3 सेशन होंगे, तो 3 घंटों में हम इसको 3 सेशंस में कवर कर पाएंगे. सो द फर्स्ट मॉड्यूल इज बिजनेस स्ट्रक्चर एंड टाइप्स ऑफ ओनरशिप्स. दैट इज वेयर वी अंडरस्टैंड कि मेरे बिजनेस के लिए किस तरह का स्ट्रक्चर ज्यादा अप्रोप्रिएट है और क्यों. उसके बाद में हम समझेंगे बेसिक नॉलेज ऑफ फाइनेंस, बैलेंस शीट क्या है, P&L क्या है, कैश फ्लो क्या है, बैलेंस शीट को कैसे यूज करते हैं बिजनेस डिसीजन लेने के लिए, P&L को कैसे यूज करते हैं बिजनेस के डिसीजंस लेने के लिए, कैश फ्लो को कैसे यूज करते हैं बिजनेस के डिसीजंस लेने के लिए, वर्किंग कैपिटल क्या है, और अकाउंटिंग क्या है. दैट इज व्हाट वी विल अंडरस्टैंड. In module 3, we will talk in terms of documentation and legal registrations. Usha ji has very rightly started the session with that one experience, where people did not have even the balance sheet also with them, and that is really astonishing. So, what are the kind of registrations as a business person we need to have for our business, irrespective of the structure? क्या है? That is what we will understand. In module 4, our focus is going to be on licenses and statutory compliances. In module 5, we'll talk about the taxation basics. सभी को मालूम है, सभी समझते हैं कि टैक्स के मामले में, चाहे वो इनकम टैक्स हो या फिर वो GST हो, compliance बहुत जरूरी है, अदरवाइज उसके consequences बहुत far reaching होते हैं. So how to avoid those consequences and ensure that our businesses are fully compliant with the taxations, that is what we will understand as part of module 5. In module 6, we will understand import and export regulations. I'm sure many of you must always be exporting your products, and remaining of you, I'm sure, may be aspiring to get into exports of your products. So what are the import and export related regulations that we need to understand? Please remember, all of you who are here on this session, you do not have to do everything by yourself. You have the people who will do it for you, but you ought to know as to what are the regulations with regard to import, what are the regulations with regard to export, so that you have a better control on the import and exports of your organization. Thereafter, we'll talk about the branding and intellectual property. And here I would like to tell you, uh, most people think if in all over the world, the businesses are run based on the strength of the tangible assets. But contrary to this myth, the businesses world over are run on the strength of the intangible assets. And what are the intangible assets? Intangible assets are your brands and your intellectual property rights. So how to protect your intellectual property right, how to monetize your intellectual property rights, now that is what we will understand as part of module 7. And finally, of course, we will come to the module 8, and that is where we will understand the employment laws and HR compliances. Very important. And I'm sure Poonamji was mentioning about this sustainability, and I'm sure I'm so happy to hear this term sustainability, because that is what is so imperative in today's environment for every one of us. So and when you talk about the sustainability, when you talk about the ESG, in case of ESG, S and G or E, all are important. But then in case of I think somebody's speaker is not mute. Rupali ji, can you please mute yourself? Okay, thank you, Rupali ji. So employment laws and HR compliances. So this is what we will cover as the module 8. And as I said, we should be able to finish it in 3 sessions, including today's session. Let's start with the first, key responsibilities of company promoters, directors, and business owners. ये जो सवाल है, this question is very critical for any business, because this question is the vision of the promoter or of the business owner. And this clarity is absolutely must for every one of us, because if there is a clarity with regard to the key responsibilities of company promoters, directors, and business owners, believe me, the rest of the things fall in place automatically. The business itself falls into the place automatically, and the business starts growing automatically. And for this, what we will need to understand, we will need to understand and understand a question: what is purpose of any business? Maybe some of you would like to respond by unmuting and sharing as to, in your understanding, what is purpose of a business? Any one or two?
To earn money.
Absolutely, to earn money, right? Okay, anyone else?
To create wealth.
To create wealth. Fantastic, very good. So now that we have a limitation of time, let me tell you, money is good, creation of wealth is also very good. I have delivered these programs across the globe in more than 50 locations for ArcelorMittal and many other corporates. And typically, the answer to this question that people give is, purpose of a business is to make profit. And let me tell you, it is completely wrong. And why it is completely wrong? It is completely wrong because if purpose of a business was to make profit, we would not hear of a company called Google. While Larry Page and Sergey Brin, the founders of Google, started making profit within very first few years of their operations, they would have said, purpose of a business is to make profit. We have made profit. Purpose is achieved. Let us close the business. If the purpose of a business was to make profit, we would not hear of a group called ArcelorMittal. Why? Mr. Mittal, within very first few years of his operations, started making profit. He would have said that the purpose of a business is to make profit. I have made profit. Purpose is achieved. Let me close the business. And remember, friends, if the purpose of a business was to make profit, we would not hear of a group called Tatas. Why? Jamsetji Tata, the founder of the Tata Group, made huge profit from his exports business and from his textile business. And he would have said that the purpose of a business is to make profit. I have made profit. The purpose is achieved. Let me close the business. So why do I say that the purpose of a business is not to make profit? And that is because, friends, making profit in a business is compulsory. Making profit in a business is mandatory. Making profit in a business is non-negotiable. Making profit in a business is not a matter of choice. It is not a matter of an option. If you are in business, you better make profit. So therefore, making profit in a business is mandatory, and therefore it is not the purpose. Then the question is, then what is the purpose? And if I tell you, the purpose is to create value. To create value. And doesn't really matter, friends, whether our business is in America, Asia, Russia, Europe, anywhere in the world. Doesn't really matter as to what is the product that we make. Doesn't really matter as to what industry do we belong to. Doesn't really matter as to what is size of the business that we have. All the businesses all over the globe have one single purpose, and that is to create value. That is to create value. Now the question is, how do we create value? So we create value by converting resources into result and result into resources. Now this point that I am discussing with you, now please pay full attention to it, because this is the mantra behind all the big business empires that we see in anywhere in the world. So how do we create value? We create value by converting resources into result and then result into resources. Now, what does it mean? It means we all know Jamsetji Tata. Now, what Jamsetji Tata did? Jamsetji Tata started his industry, his business, some capital that he had. So what he did with the capital that he had, with that capital, he set up an industry, a company, a factory. So what he was doing at that time? He was converting resources into result. What was the resource? The capital that he had. And what was the result? The result was a factory, the textile factory that he built in his times. Now what do? Having converted your resources into result, यानी कि आपके पास में जो पैसा है उसको यूज करके आपने एक फैक्ट्री खड़ी कर दी. अब आप क्या करेंगे? Now what you will do is, now you convert result into resources. यानी कि क्या? यानी कि now that you have made the factory, now you produce the textile, you produce the cotton, you produce the cloth and sell it in the market. And when you sell it in the market, what you do? You generate profit, you generate cash, and that is how you create value, by converting resources into result and result into resources. And I'm sure, friends, all of you can very easily visualize कि दुनिया में जितनी भी business empires हैं, all the business empires of all over the globe, how have they become so big? They have become so big because they followed this mantra of converting resources into result and then result into resources. And I'm sure you can imagine, if Jamsetji Tata, having made enough profit from his first factory, if he would have thought, okay, enough, now I don't have to earn anything, and he would not have plowed back the profit that he generated from the plant that he had set up, would we hear of this group called Tata? And the answer is no. Why we hear the group of Tata and other groups? That is primarily because all these people, what they have been doing continuously, converting resources into result and then result into resources. So they have been capped, they have been continuously running this cycle, and that is how they have become so big. Now, a question that can come to your mind and should come to your mind, and that is, create value for what? ये value create करना है, लेकिन किस लिए create करना है? Now, before I tell you create value for what, let me also answer another question that may be coming to your mind as to, I'm sure some of you may be wanting to know, what is the meaning of value creation? The simplest meaning that I can give you of the word, the phrase value creation is to make this world a better place to live today than what it was yesterday for everyone. For everyone. That is what is the simplest meaning of value creation. So that is the purpose of all the businesses all over the globe, to make this world a better place to live than what it was yesterday for everyone. For everyone. So create value for what? Create value to strengthen economy of the nation so as to make a positive difference in everyone's life. And that is what Poonamji was ascribing to. That is what Usha ji was also ascribing to. So create value for what? Create value for strengthening the economy of the nation, and without causing irreparable damage to the planet. Without causing irreparable damage to the planet. So this is what, this is how we, this is the purpose of the business, and this is how we create value, and this is the reason as to why we create value. And friends, I'm sure you will be very easily able to visualize converting resources into result is nothing but growth. So when you are plowing back the profit that you have earned in your business, by plowing back those profits, what you are achieving is growth. And when you are converting those results into resources, what you are achieving is the profit, isn't it? So when you set up another plant, you start running that another plant or another factory start giving you a profit, and that is what you are converting result into resources. Now, what is good corporate governance? So when our company, our factory, our business, our plant is working for strengthening economy of the country, that is what is good corporate governance. Again, a simplest definition that I can give you, what is good corporate governance? Good corporate governance is when you and your business is working to strengthen the economy of the nation so as to bring positive difference in the life of everyone. And that is what is good corporate governance is all about. And when you are doing it without causing irreparable damage to the planet, that is what is the simplest definition of sustainability. So what is sustainability? This is what is sustainability. Because this planet that we have got as a gift from our ancestors, it is a gift that we have not to squander. It is a gift that we need to pass on to the next generation, not in the same condition in which we received it, instead in a better condition than in which we received it from our ancestors. And that is what is sustainability is all about. And I'm sure when you talk of good corporate governance and we take care of the sustainability, ESG, environment, society, governance, CSR, corporate social responsibility, triple P, planet, people, and profit, all are automatically taken care of. People talk in terms of circular economy. And of course, all of us as business persons need to definitely talk in terms of circular economy. People say, what is circular economy? Circular economy is reuse, repair, and recycle. That is what is commonly understood as a circular economy. And that, of course, is right. But a better understanding of circular economy can be understood from this mantra, converting resources into result and result into resources. Now, this is truly a circular economy. All the big business empires that you see on this earth today, in India or outside India, how have they become so big? They have become so big by following this mantra, converting resources into result and the result into resources. And that is how Tatas or Birlas or Ambanis, so I can I'm naming them because all of us do hear of them day in and day out, but there are hundreds and thousands of them all over the globe. Now, this is also risk management. So when you are taking care of all these aspects as a business person, as a promoter, as a director, as a business owner, now when you are taking care of all these aspects, and I'm sure all of you can very easily understand and realize that जब आप ये सारे aspects की care करते हैं, automatically what you are achieving, you are also achieving risk management of your business. यानी कि इसके साथ साथ में आप अपने business की risk को भी manage कर रहे हैं. So the question is, what is the key responsibility of a director, promoter, or a business owner? If I can tell you in simple words, all these things that I've discussed with you just now, now these are all key responsibilities of promoters, directors, and business owners. And I'm sure all of you would agree with me. And that is what we need to remember all the time. And this is what should drive us. And believe me, if this is what drives us, then achieving greater scale in our business is only going to be a matter of time. So when we do all this, remember, that is what is leadership. So the simplest definition of leadership, again, is, when you are working or when your business is working, not for amassing wealth for yourself, when your business is working for creating wealth for the entire society, for making positive difference in the life of others without causing irreparable damage to the planet. And that is what is leadership is all about. So with this understanding about the key responsibilities of the directors, promoters, and the business owners, let us move to the next topic. And the next topic is clarity on what compliance means and what does it matter. So before I move to this part, I can keep it open for 1 or 2 minutes. In case if anyone has any question, you are welcome to ask me. Else we will continue, and we can take in case if there are questions at the end of the session also. Okay, so if there are nothing, then we can move to the next topic.
Sir, there is a question from one participant. So
Yes,
do we
please.
address now or we address at the end?
Okay, you can, if it may be pertaining to this topic that we are discussing.
Yes, I think it is pertaining to this topic.
Okay,
She's there in the
please.
chat, if you can
Yeah.
read it out. Or should I read it out for you?
You can please do it, because I will not be able to see since my PPT is on, so I won't be able to see the chat. So please read it out and I will respond.
1 minute. Neha, can you please read out? Yeah.
Here the calculation is wrong because 135 into 38 will make 51 meters.
Somehow I just saw.
Even I just saw that, so it's
No, it's not visible.
it's not visible. Yeah. Okay, sir. Let's move ahead. It's
Sure.
not visible now. Yeah.
Okay, no worries.
Yeah.
Okay, so now we talk about, or we discuss clarity on what compliance means and what does it matter. I'm really so glad because Usha ji has really set the tone of this session. I'm so glad even Poonam ji also mentioned that compliance is imperative. It's not a matter of choice. It's not a matter of an option. And that is what we need to understand. So when we say compliance, now what the compliance would mean and why does it matter? That is what we will now understand. So number one, compliance is equal to running business by the law. It covers the full spectrum of the business. So it's not that compliance would mean only taking care of the income tax or only taking care of the GST and forgetting about rest of the things. No, compliance would mean each and every aspect, the aspect which is applicable to your organization, and that is what we have to focus on and ensure that we comply with. I have identified about 50 different laws which will be applicable for the businesses collectively for all of us. And I'm going to discuss that with you in the course of the day. But for the moment, it covers the entire spectrum of the business. It establishes trust across the shareholders, protects from financial and legal liabilities, because there are consequences in case if a business fails to do the compliance. Remember, there are dangers. And these dangers today are multiplying. And why they are multiplying is because of the focus of the government on good governance and use of the AI. Things are becoming very easy for the governments and the authorities to monitor. And therefore, it is necessary because it protects from the financial and legal liabilities. It strengthens governance and strategic decision making. So obviously, when you are fully complying with the applicable statutes, the kind of information which is available at your disposal, you are able to take better decisions, better strategic decisions for your business. It unlocks government incentives and recognition. I'm sure FICCI Flow should also be doing. FICCI has been doing. Many other such organizations have been doing. All the businesses which are fully compliant and focus on the good corporate governance, they are given the public recognition. Mandatory for raising fund or going public. So doesn't really matter whether you are raising money from the public or you are raising money from a bank. Bank also would always insist that you are fully compliant with the statutory provisions. Enables smooth scaling, expansion, and exit. More than that, please remember, when you as the owner of the business, promoter of the business, director of the company, when you are conscious about the compliance, what you do, you build a culture in the organization of of compliance. And which means what? Which means when you take care of the compliance, everybody in the organization is everybody in the organization everybody in the organization is also aware, and that culture takes care of the compliance by itself. And as a result of that, scaling becomes easy because your organization is complying. So the culture in your organization is very positive. It is forward looking, and therefore for the scaling and for the expansion, it becomes very supporting. It's not a cost, it's a foundation for future proof growth. It is, and that is what is the compliance means. Now, what are the practical tips to stay compliant and confident? So my idea is not only to share with you as to what compliance is, but at the same time also share with you some of the things that we all can do so as to remain compliant and confident. I'm sure most of you are already following these practices, many of these practices, or some of these practices. And most of you then can, of course, start following these practices here on. So I'm going to share with you 20 such things, the practical tips to stay compliant. Incorporate your business under the correct legal structure. After this part, I'm going to come and discuss with you different forms of the organization. And depending on the size of the organization that you have, depending on the vision that you have for your organization, you can decide as to what kind of the form of the business would be most suitable to you. So with that, I'm going to discuss with you after this particular part. Register with all applicable authorities. Create a statutory compliance calendar. Maintain updated books of accounts. Please remember, you are in business. And if you do not know what is your P&L, if you do not know what is your balance sheet, I can tell you nothing worse can happen to your business than that. So in your business, doesn't really matter कि आपका business कितना बड़ा है, कितना छोटा है. You ought to know profit and loss. You ought to know your balance sheet, because unless you know as to what is the profit or loss that you're making, remember, it is going to be a very dangerous situation. And somebody has very rightly said, he says, in a business, it is better to make loss than to know. It is better to make loss and know that you're making losses than to make profit and not to know that you're making profit. And why is that so? That is because if you're preparing your profit and loss statement regularly, it means what? It means you know in which direction your business is going. So you are making P&L and your P&L is showing that you are incurring losses. That means you know that you have a problem on your hand. And once you know that you have a problem on your hand, you will try and find out a solution for it. But if you do not know that you're incurring losses, remember, your business is going to close down, unfortunately, sooner than later, because that is what has happened with hundreds and thousands of businesses across the globe. And if you're making profit and you do not know that you're making profit, it is even worse. Why? Because you're making profit. But what is happening? Your profit is sitting in your inventory. Your profit is sitting in your receivables. यानी कि आप प्रॉफिट तो बना रहे हैं, लेकिन आपकी इन्वेंट्री बढ़ रही है, आपके रिसीवेबल्स बढ़ रहे हैं, P&L में प्रॉफिट दिख रहा है, लेकिन हाथ में पैसा नहीं है. So that also you will know only when you make a P&L. And so maintain updated books of accounts. Sometime in future, I will also talk to you about a technique which is known as Padta. I'm sure many of you must have heard of it. Many of your businesses may be applying also Padta in their business. Now, Padta, just to give you a brief introduction, Padta is a system of business control that was devised by none other than Sri Ghanshyam Das Birla ji more than 100 years back. And this Padta system of business control is so amazing that today also all the Birla Group companies, not only the Birla Group companies, all the Marwadi companies, not only Marwadi's companies, today even the American, European and Japanese companies are also applying Padta in their system. So that is what we have to do, maintain books of accounts completely update, file returns and statutory forms on time, get your legal contracts vetted. It is absolutely necessary. आप एक contract sign कर रहे हैं किसी के साथ में किसी भी चीज के लिए, you cannot just rely on your own intelligence, or because sometimes because of time you may not be able to apply your mind to it, and those contracts may have consequences. So it is always better to have your agreements and contracts vetted from someone who is professional. Company comply with the labor laws, secure your intellectual property, very, very essential. And I can tell you, when I speak to you, some of you in person, I would be able to identify for you as to this is the IPR that you are having in your business, and you are not aware. And you are not aware. And that is what is necessary, that you are aware as to what kind of IPR that you are having, and you must secure it. Conduct periodic internal audits. Internal audits, remember, is not an expense. Internal audit is a tool to cut future losses. It is not an expense. It is a tool to cut future losses. Seek professional help when in doubt. Ensure board meetings and minutes are documented. I'm aware that some of you are having private limited companies. So as a private limited company or as a closely unlisted public company, even though the requirement of holding the board meeting is mandatory for you, and in my experience all over the country, I have seen people tend to take these minutes, they tend to take these minutes lightly. Now, in case if your company is a private limited or unlisted public limited, hold your board meetings. Doesn't really matter if all the board members are all family members. And let that board meeting happen formally, not on the dinner table. Let that board meeting happen formally. Let the discussion be documented.
ನೋಡ್ರಿ ಬೋರ್ಡ್ ನಾನು ಇದು ಯಾಕೆ
Anjuji,
ಮಾಡ್ಬೇಕಂತಂದ್ರೆ ನಾವು ಕಂಪ್ನಿ ಮಾಡ್ಬಿಡ್ತೀವಿ.
Anjuji, can you please mute yourself? Thank you. So do hold your board meetings regularly. Follow the agenda and let those minutes be documented. And I can tell you, it will not only give a direction to your business, it will also take care of many likely problems that can happen in future, even if all the board members belong to the same family. Train your team on compliance basics. Use government portals wisely, because today, fortunately, with the current government's drive on digitalization, all the informations are available on a click of a button for every one of us. So when all these informations are available on a click of button for every one of us, I think we must use it very wisely. Be tax literate. Implement whistleblower and grievance mechanism. So whistleblower may not be, depending on the size of the business. If it is a listed company, then of course whistleblower requirement is mandatory. But in any case, the grievance mechanism can be for all the companies proprietary concern to a listed company, a global company. Ensure data security and privacy. Track changes in laws and regulations. So we know GST laws are changing constantly. Income tax laws are also changing constantly. As a matter of fact, I'm sure every one of you must be aware that it is expected from 1st April 2026 in India, we will have a new income tax law, right? So these changes are happening, and with the help of the teams that you have, you do not have to do everything by yourself. So you have a CFO, you have an accounts head, finance head, you have a legal head, you have a company secretary. You can take help of these professionals to update you regularly, periodically as a system. Digitize compliance tracking, keep your startup board investor ready. So those of you who have the aspirations to take your business and scale it up, and not only scale it up but also have the private equity coming into your business, so all these compliances will help you, and that is what you should attempt from the very beginning. Make compliance part of your brand value. Believe me, it is the experience world over. The companies which are compliant, the companies that follow good corporate governance, the investors all over the globe assign them much higher valuations than what they would do to a company which is not compliant or not good corporate governance compliant. Let's now look at what are the consequences quickly, the consequences of poor compliance for a business. And I'm just going to be a little fast here because it's just sharing something just to make you aware, not that you are not aware already, just to ensure that we all are on the same page as far as the consequences of the non-compliance are concerned. So one is hefty penalty and fines, loss of legal standing, disqualification of directors. So in case if a company fails to file the uh, annual accounts with the ROC, or if it fails to file the annual returns with the ROC, then the directors of those companies will become disqualified to be appointed on the board of any company, let alone that company. So that is a very major consequence. Investor withdrawal or refusal to invest, cancellation of DP, IIT or MSME recognition, blacklisting from the government contracts, legal notices and court proceedings, loss of reputation and brand trust, delayed or denied bank loan. Very simple compliance. The companies who have taken working capital finance from the banks, as per the requirement of the banks, the borrowers have to, from time to time, submit quarterly, monthly returns with the banks. If it is not done, and remember, if it is not done, the bank will simply levy 2% additional interest on your loan without you knowing it, actually, because they will not tell you that you have not submitted the monthly stock data return or the quarterly return and therefore we are charging you 2% extra. They will not tell you. They have already incorporated this clause in the loan agreement that they have signed with you. So if you do not take care of this, then you will be unduly paying 2% extra interest without you knowing it, actually. So, and plus, of course, it will also result into delay of the extension of the facilities that you may require from the bank. Interest liability on the delayed dues, increased scrutiny from the tax department. You may be running your business completely scrupulously. आप अपने बिजनेस को पूरी ईमानदारी से कर रहे हैं, एक पैसे की भी आप हेराफेरी नहीं करते हैं, और ये बहुत अच्छी बात है. लेकिन अगर आपके कंप्लायंसेस सही नहीं है, unnecessarily you will be subjected to scrutiny by the tax department, the GST department, and that is where you will end up spending much more time than what you would have spent in ensuring that your company was compliant with the tax laws, direct as well as the indirect tax laws. Stressed employee morale, ineligibility for IPO or strategic acquisitions. So I'm sure we all know this. And anytime when we want to acquire any other company, or anytime somebody wants to purchase our company or put a stake in our company, what he would do a due diligence, or we would do a due diligence of the company that we aim to acquire. So obviously, the someone who is trying to acquire trying to purchase our company, and we are prepared to sell our company to that acquirer. If the compliances of our company are not in place, that will result into disinterest in the mind of the proposed acquirer. It is director's personal liability, business disruption, poor internal controls, loss of intellectual property rights, vendor and partner exit, because obviously the compliances are not good, then the vendors and the partners can exit. Litigation and the legal cost, which is going to be huge, and long-term value destruction. So these are, friends, the consequences in case if a business is not fully compliant with the applicable laws. So now again, I'm going to leave it open for 1 or 2 minutes in case if someone has a question, we can take that question. Usha ji, any question from anyone?
Sir, no one has posted any question in the group. I think.
Okay. Is the speed okay?
Yeah, it's clear, sir.
Am I too fast or too slow?
No, it is clear, sir.
Okay, thank you so much. Thank you so much. Thank you. Now we shift our focus to the module 1, business structure and types of ownership. And in this, what we are going to discuss is overview of business structures in India and comparative analysis, benefit, control, liability, and funding potential. And then, of course, choosing the right business structure for scalability. So we begin with overview of business structure in India and comparative analysis. Now, as far as India is concerned, we can have a business which is proprietorship, or it is partnership, or it is LLP, or it is OPC. OPC is one-person company, or it is private limited company, or it is unlisted public company, and finally it is listed public company. So primarily in our country, we can have these 7 forms of business organization. Now, which one we should go out of these 7 will depend on what is our vision for our business. What is our business vision for our business? How do they differentiate from each other? Let's understand that. As far as the legal status is concerned, proprietorship is not a separate legal entity, and therefore the liability of the business are the personal liability of the owner of the business. It same is the case in case of partnership also. So the liabilities of the business partnership firm are the personal liabilities of the partners. When it comes to LLP is limited liability partnership. Now, this is a new law that was brought into this country in the year 2008. LLP gives you the benefit of partnership and also of a limited company. LLP gives you benefit of partnership and also of a limited company. So what does it mean? It means it is a separate legal entity. So if you want to start LLP in this country, you will have to go to the office of ROC. When I say go to the office of ROC, it means you will need to approach the MCA, and through the MCA, you will need to register your firm as a LLP. What is the major advantage? The major advantage is, unlike in case of partnership, where the liability is unlimited, in case of LLP, the liability is limited to the extent of the contribution that you have agreed to make to the LLP. OPC is a one-person company. Interestingly, I'm sure many of you would be aware of this. Interestingly, in our country, you can start a company which is known as OPC, one-person company. That means you are the sole owner of that company. This company is registered with the MCA. So it is registered like LLP or any private limited company or a public limited company. The only thing is, in case of OPC, there is only one shareholder, and that is one person who owns that company. What is the advantage? The advantage is, again, OPC has got, even though it is a one-person company, the liability is limited. So in case if OPC incurs huge loss for whatever reason, the shareholder, the one person who owns that company, can be held responsible only to the extent of the capital that he has committed, not more than that. And that is what is OPC. OPC then can be converted within a period of 2 months. After 2 months, into a private limited company. Or if this company achieves a turnover of 1 crore, then also this OPC company can be converted into a private limited company. Now, the question that may come to your mind is, why should somebody start OPC? So let's say you are starting a new business, and since you are starting the new business and you know it will take some time before this business really takes a good shape, and therefore you want to keep it simple. So you start as an OPC and keep working on your business. The moment you complete 2 years and the moment the business is scaled beyond a turnover of 1 crore, then you can start OPC. Private limited company, I'm sure all of us are aware, it is a separate legal entity, and OPC is also a separate legal entity. Unlisted public company and listed public company, in any case, we all know are separate legal entities. Separate legal entity का मतलब क्या है? Separate legal entity का मतलब ये है, if XYZ is the company and I am the owner of that company, I own the shares of that company. So that company and me are separate entities. Even though I own the shares of that company and I are separate entities. That means my obligations will not be the obligations of the company, and company's obligations will not be my obligations. So that is the meaning of separate legal entity. How does the formation happens? Proprietorship, we all know there are not much requirement, so it's very easy. In case of partnership, you of course need to find out the partners and form and have a partnership deed. In case of LLP, it is slightly moderate because you have to go to the company, you have to go to the Ministry of Corporate Affairs website, and they have a system called Spice Plus, and through the Spice Plus you can incorporate OPC. Same is the case with the private limited company, public unlisted public company, and also listed public company. Ownership, we all know, is single owner. Partnership, the maximum can be 20, minimum got to be 2. LLP, there is no upper limit as such, but there has to be minimum 2 partners. OPC, as we discussed, will have only 1 person. Private limited company, minimum two shareholders are required. Maximum can be 200. So the moment company wants to increase the number beyond 200, this company will need to convert itself into a public limited company. In case of unlimited public company, the minimum requirement is of 7 shareholders, maximum can be anything. And in case of public company, we all know in any case, minimum requirement is of 7 shareholders and otherwise is unlimited. Liability, I think we have discussed. In case of proprietorship or partnership, the liability is unlimited, and in all the other cases, it is going to be limited. It is going to be limited to the extent of the contribution. How about the control? So in case of, as far as the control is concerned, proprietorship का पूरा control उसके हाथ में होता है. In case of partnership, the control is shared among the partners. In case of LLP, it is shared as per the LLP agreement. So some of the partners may have the control, some of the partners may not have the control in case of LLP, as they would agree between themselves. OPC, the control is in the hands of the owner or the person whom he nominates. In case of private limited company, unlisted public company, and the listed public company, the control and management is in the hands of the board of directors. Here I would like to tell you, even though the management is in the hands of the board of directors, but remember, ultimate authority in case of private limited company or unlisted public company or listed public company, the ultimate authority is with the shareholders. So because shareholders are the owners of the business. Board of directors are only nominees of the shareholders. So in a way, board of directors are the agents of the shareholders or the owners of these companies. And therefore, though the management is given to the board of directors, the control, really speaking, or the ultimate authority would be in the hands of the shareholders. Regulator, so the proprietorship firms are regulated by the local bodies, and in any case, income tax department, because income tax department, where there is a business, there is income tax department. Where there is a business subject to certain threshold, there is a GST department. So they will be the regulating. In case of partnership, it is registrar of firms. In case of all the other entities, that is OPC, LLP, private limited company, unlisted public company, listed public company, the regulators are MCA, ROC, and in case of listed company, it is also SEBI, because SEBI does the regulation of which companies? SEBI does the regulation of the companies which are listed on the stock exchanges. Statutory audit, it is not mandatory unless the turnover is more than 1 crore, and that is required as per the income tax. Same is the case in case of partnership also. LLP and all these entities, LLP, OPC, private limited company, unlisted public company, listed public company, statutory audit is mandatory. That means you have to appoint a qualified chartered accountant to do the audit of your company's financial statements. What are the annual filings? So as we were discussing about the compliance, and here I would like to share with you what are the annual filings. So in case of proprietorship, since you are in a business, it is only ITR, and so is the case in case of partnership. But in case of LLP, OPC, private company, unlisted company, listed company, not only they have to file the returns with the ITR, but the income tax department, they also have to file many returns with the registrar of companies. That would include the annual returns and the annual accounts. Plus, in case there is a change in the board of directors, there are certain resolutions which are passed by the these companies. So those resolutions may also need to be filed with the ROC. So so these are the additional filing which the companies have to do with ROC. As far as the SEBI is concerned, friends, I'm sure many of you must be owning listed companies as well. Many of you may be also on the boards of listed companies, either in the form of independent director or a normal director. Now, when it comes to SEBI, listed companies, SEBI regulations become applicable, and there are multiple of them. So there's a regulation called LODR, Listing Obligation and Disclosure Requirements. There is a regulation called ICDR, Issue of Capital Disclosure Requirements. There is a regulation called PIT, which is for the purpose of prohibition of insider trading. Because in case of public limited company, it is possible the board members or the people, some of the people who are privy to some unpublished price sensitive information, it is possible that they can misuse that information by playing on the stock market and make undue benefit for themselves. So that is why there's a regulation called PIT, which is prohibition of insider trading, and that is what will need to be followed. And there is also a regulation called SAST, SAST, that is substantial acquisition of and takeover of companies. So these are the regulations that will need to be followed. As far as the taxation are concerned, there are individual slabs applicable, because proprietor business is taxed as an individual. So individual slabs are applicable. In case of partnership, the tax rate is flat 30% plus surcharge. Same is the case with the LLP. Same is the case with the OPC. But when it comes to the private company, there are two options, 25% or 20%. So 25% is, when a company is not, so there are two different situations where a company will have the option of paying tax at the rate of 25%, or it will have the option of paying tax at the rate of 20%. Now, the question that can come to your mind is, when a company will have to pay tax at the rate of 25%, तो अगर ये कंपनी इनकम टैक्स के जो इंसेंटिव्स हैं वो इंसेंटिव्स को अवेल कर रही है ये कंपनी, तो इस कंपनी को 25% के हिसाब से टैक्स भरना पड़ेगा. और लेकिन अगर कोई दूसरी कंपनी है जो कि मैन्युफैक्चरिंग कंपनी है और 2019 के बाद अगर ये कंपनी ऑप्ट करती है कि हमें इंसेंटिव्स नहीं चाहिए बाकी के, we will simply pay interest tax on our income, then they can opt for a lower rate of tax, that is 22%. Same is applicable to the unlisted companies, and it is also applicable same to the to a listed company. What about the compliance burden? In case of a proprietary concern, it is the lowest. In case of partnership, it is little more. In case of LLP, it is moderate. Same is the case with the OPC. And as we keep on increasing, moving from the proprietary concern to listed company, the degree of compliance burden keeps on increasing. What are the funding options? So in case of proprietorship, we all understand it, because the person who is starting the business, so he has to put the capital from his pocket or from his family. In case of partnership, it is not only the individual, but the partners also put in. In case of LLP, the finance can come from the banks and also from the venture capital, depending on what is the project that the LLP is having. In case of OPC, the finance can come from the banks and the angel funding. In case of private limited, the scope can increase and it can become angel funding, VC funding, PE funding, and also through ESOPs. So when I say ESOPs, that means these companies, private limited companies, or all the companies for that matter, would like to retain their employees, talent in the company, and that is how they will come out with ESOPs. So through the ESOPs, they will be able to raise capital. In case of unlisted public company, the capital can come from the private equity, or it can also come from the institutions. And in case of listed company, it can come from IPO, it can come from QIP, that is qualified institutional and portfolio purchaser. FPO is follow-up public offer, and it can also come from the foreign investment. So these are the funding options in case of the different forms of the business organizations. What about the transferability? Is it easy for you to transfer your business in all the cases? No, it would depend from the form to form. So proprietary concern, business cannot be transferred. So you cannot, if I'm a proprietor of a business, I cannot transfer my business. And why I cannot transfer my business? Because my business does not have a legal entity. Since my business is not having a legal entity, it cannot be transferred. So अगर मुझे मेरा business किसी को बेचना है, तो my business will be sold as the individual assets, as individual assets. So that is how the transfer will happen. In case of partnership, the transferability can happen only with the consent of the partners. But please again remember, in case of partnership also, it is not a legal entity. So a partnership as such cannot be transferred. Only what can happen is the partnership's shares can be transferred. In case of LLP, it is possible with the agreement. In case of OPC, transfer is not allowed by law. Private company, it is easily transferred. So let's say, for example, you own a company XYZ Limited or XYZ Private Limited. You and your family holds 100% shares of that company. Let's say you and your wife holds 100%, you and your husband holds 100% shares of this company. And you somehow feel that now the time has come for you to exit from this business. So it is very easy. You only need to transfer the shares that you hold in this company to the proposed buyer. And merely by transferring the shares to the proposed buyer, the transfer of private limited company will happen. And same is the case with the unlisted company and the listed company. The only thing is, in case of a private limited company, all the shares are with you or are with limited number of shareholders. So therefore, the transfer becomes very easy. In case of unlisted company also, even though they are unlisted company, but there is not much difference operationally and practically between a private limited company and a unlisted public company. So therefore, the transfer in case of unlisted public company is also very easy. In case of a listed company, if the transfer is to be done, then of course SEBI will come in the picture. So in case you want to do the transfer of the share, then approval of the SEBI and the person who wants to acquire your company will also need to make a public offer, and all those formalities will need to be followed. अब सवाल ये है कि ये जो डिफरेंट फॉर्म्स ऑफ बिजनेसेस हैं किसके लिए सूटेबल हैं. नंबर वन, proprietary concern is suitable for small traders or freelancer, or someone who doesn't want to grow, someone who is happy with whatever he has, and he has no ambition of expanding that business. In that case, proprietorship is ideal. Partnership is going to be a small and family business where let's say, for example, there's someone who is a technocrat, but he does not have the capital, and there is someone who's got a capital but he does not have a technology. So both of them can come together, form a partnership, and that is how it would be suitable for them to run the business. LLP, friends, globally are typically being used by the professionals. So the investment companies, the investors, merchant bankers, the chartered accountants, cost accountants, company secretaries, lawyers, consulting firms. So they use the format of the LLP. OPC is good for solo founder with future private limited goal.
No.
So suitability is for solo founders of the OPC. Private limited company, you are starting a new business, you are setting up a factory, and you have the technology, you have the wherewithal, you have the resources, you have the capital. So you start the business, and when you start the business, because you want to keep the control in your hand and not share it with anyone, so you start a private limited company, and so this is good for a scalable business. That means tomorrow, in case you have to set up another plant, then you can do that, and you can induct more shareholders. Of course, the number cannot go more than 200. Unlisted companies is good for the expanding companies, and the public listed companies, of course, is good for the large public entities. So these are the comparative analysis of benefit, control, liability, and funding potential as far as the different forms of the businesses are concerned in this country. So if there is any question, you can please unmute yourself and ask it. I will be happy to take your question. Before we go to the next topic of choosing the right business structure for
So,
scalability.
can I
Yes,
ask
please.
one question?
Please.
I have a sole proprietorship company and I also have a partnership company.
Mhm.
I was just thinking my partnership firm, will it be better if I convert that into LLP?
Okay. Yes, I think that's a very good question. So you have a proprietorship and you also have a partnership.
Yeah.
So now tell me, what is the product or the business of these two business entities that you have? Is the business same in case of proprietorship and the partnership, or they are different?
My sole proprietorship company, I run my trade finance business and I
Okay.
have been an independent director in 2-3 companies in the past.
Uh-huh.
And this sole proprietorship company does a lot of corporate licensing work.
Okay.
It's basically trade finance, and I also have a brand
Okay.
under this sole proprietorship company, which is an FMCG brand.
Okay, good. And what about the partnership?
Partnership firm is with my husband because he has a stainless steel manufacturing business.
Okay.
So I take products from him, stainless steel utensils, and sell them under the brand which is in this partnership firm.
You mean to say, okay.
I have a brand in the partnership firm and I sell these stainless steel products there.
Okay.
And
Right.
also do little bit of stainless steel trading.
Okay, good. So are you into manufacturing in your partnership business, or?
So partnership business does not have a manufacturing facility. My family business has a manufacturing facility.
Okay, very good.
Partnership business is only trading.
Okay, very good. So, okay, good. So both your these businesses, proprietorship firm and the partnership firm, they have independent business activities. That's
Yes.
number one.
Yes.
And number two, your second, so they can remain. So, number two, your second question, whether you should convert your partnership firm into LLP. I think you should, and the reason behind is because in case of partnership, remember the liability is unlimited. Okay.
Right.
So, and whereas in case of LLP, the liability is limited. So if you shift to LLP, you will be safeguarding yourself
Okay.
against a possible risk in future. So advisable that you should go for LLP.
All right. Thank you.
Yeah.
Thank you so
Okay.
much.
Sure.
Yeah, we have a couple of more questions in the group, sir. One
Please.
is Ms. Rupali is asking what is the difference between unlisted public versus private limited? Is it
Okay.
only the number of minimum shareholders? And another question linked to that is when would one choose to have an enlisted public company?
Okay.
When would one to have enlisted public company versus private limited company?
Okay, good. Very good.
Why
Very
would
good.
one choose between?
Very good. So, see, the first question is the difference between a private limited company and the unlisted public company. So, remember, as in India, under the Indian Companies Act 2013, you can incorporate a company as a private limited company, or you can incorporate a company as a public company. There are many differences, but the prime difference is private limited company can have maximum 200 shareholders. Public company can have any number of shareholders. So depending on what is your vision with regard to your business, depending on what is the capital requirement that you have for your business, you will decide whether to go for a private limited company or you would like to go for a public limited company. So assuming that you got a small business and you think that the capital that you need will come from 5, 10, 20 people, which is within your family. So you start a private limited company. But if you think that you will need more capital and therefore and going forward, you will also like to go for the IPO. You would also like to raise capital from the public. So in that case, what you do, you start a company as a public limited company. So it's not that you have to have 200 shareholders in case of a public limited company. When you start the public limited company, you will need to have minimum 7 shareholders. In case of private limited company, 2 shareholders. And that is the only difference between the prime difference between the private limited company and the public limited company. Private limited company cannot go for IPO. If private limited company has to go for IPO, private limited company will have to convert itself into a public limited company. And a public limited company, once it has reached to a big size in terms of turnover and in terms of funds requirement, so it is at that time the public limited company can take a decision to go for IPO and get their shares listed on the stock exchange. So what is the meaning of public listed company? That means a public limited company whose shares were not listed so far now is getting its shares listed on the stock exchange because they are raising capital from the public through IPO. And from then on, since their shares are listed on the stock exchange, there is a trading happening in the shares of that company. That is how this company is known as a public listed company. I hope that answers your question.
Another question is
Neha, so we are running short of time, sir, for the
Yeah. So we can take those questions towards the end of it. Actually.
End of the
Yeah, sure. Okay.
Thank you.
Thank you. Okay, so choosing the right business structure for scalability, how to do it. So I'm sure this question must be coming in the minds of every one of you. How to decide about the scalability and what to do for the scalability. So the first and foremost, we need to understand the nature and vision of your business. And that is what you will need to do. So are you building a lifestyle business or a scalable enterprise? So at this juncture itself, you will need to ask this question to yourself. What is my vision? Am I happy with whatever I have? And therefore, let it have organic growth and do not worry about anything extraordinary to be done. Or you are looking for a scalable enterprise, or you have an ambition to take your business very high and maybe one day make it public, make it public. So that is one question that you will need to ask to decide. And number two, you will eventually need external funding, team expansion, or global entry. So, if my view is, say, for example, if I think that I am happy with the way it is, then I do not have to worry. But if I am looking for a scalable enterprise, so I have the ambition that I would like my company to get listed on the stock market, not only get listed on the stock market, but also have the global operations, not only have the global operations, but also get listed on the NASDAQ or NYSE. If I have those kind of ambitions, so these are the two questions that we will need to ask. So evaluate key business dimensions. So here, these are the things that you will need to ask yourself. Control. Ask yourself, are you happy with sharing control with anyone, or you would not like to share control with anyone? So that is the question that would determine the scalability of your business. Obviously, if you are reluctant to share the control with anyone, then your business will remain small. But if you're open to share the control with the right kind of people going forward, then of course you can scale up your business. Capital needs. So again, ask the question, what are the needs of the capital that you have in your business? Are they limited or they are unlimited? And risk and liability. Do I need personal asset protection? So is that what is bothering me? I do not want. And just to give you an example, there are umpteen number of cases which I am sure all of you coming from the business community would be more than aware. There are umpteen number of cases in this country where many of the businesses or business people, they had to sell their personal belongings or personal assets because they had given the guarantee for the loans their companies had taken. So are you open to take that kind of risk, or you are reluctant to that kind of risk? That is what, again, you will need to ask yourself. What is your compliance appetite? Again, are you ready to handle company law, audit, ROC filing, etc.? Or are you open to be subjected to all these audits? Statutory audit coming in or ROC coming in. Are you open to that? If you are open to that, then you can dream to have your business scaling up. But if you are reluctant, then of course your business cannot scale up. Brand credibility. Will my business benefit from formal structure and transparency? So that is what, again, you will need to ask yourself. What is the nature of my business? Will my business benefit with the branding that I have, or with the formal structure, or my business cannot grow because the nature of the business is such that there is not much scope? So these are the things that you will need to ask yourself for the purpose of determining scalability. Match structure to the growth ambition. So look at the growth level and suggest a structure. तो अगर आपका ambition local और small रहने का है, what is the right structure for you? Proprietorship or partnership? You want, your desire is growing but risk sensitive, so you want to grow but you do not want to take too much of a risk. In that case, the right form of the organization for you is LLP or OPC. Agar if you are a startup with funding potential, so and you are prepared for this, in that case you can be a private limited company. So you have, let's say you are a fintech, or you are edutech, or you are any of these tech companies where you are open to the idea of taking your business global. In that case, to begin with, you start as a private limited company, because in a private limited company also you can have a private equity coming in. Your growth level is medium to large, then you can, the right form of the organization for you will be unlisted public company. And if you are IPO ready and you want to have a global growth, then of course you will have to have the listed public company. So you will need to have a company, your company getting listed on the stock exchanges. So look ahead, and just to give you some idea and give you additional information, please remember proprietorship or partnership. As we were discussing when someone asked us question, a proprietorship or partnership can be converted into LLP or a private limited company. LLP can be converted into a private limited company. Why I'm discussing this? Because this question must be coming in the minds of many of you who own proprietorship or a partnership or maybe LLP and wondering as to whether these conversions are possible. So these conversions are possible. OPC can be converted into private limited company when it hits the threshold. And what the thresholds are? Thresholds are number one, a completion of 2 years, and number two, the turnover increasing beyond 1 crore. So even if the turnover increases before a company completes 2 years, the company can convert into a private limited company. Turnover is not going beyond 1 crore. Company has completed 2 years. The company OPC can be converted into a private limited company. So choose a structure that can evolve with your vision. So this is what my idea has been, to share with you as to what are the different forms of the organization that we have in this country, what kind of form of organization you can decide for yourself depending on your vision for your business. Again, uh, something which is very important, and that is take expert help early. So many times I have seen people are hesitant in approaching the professional, and they think it's a cost. And let me tell you, approaching professionals is not a cost. Approaching professional is always a tool to safeguard your business interest, to safeguard your business. Approaching professional is a very good tool of risk management as well. Set up a compliance calendar, governance policy, and exit plan from day one in case if you intend to exit that business. So again, with this, let me throw it open to every one of you. In case if you have any question, please go ahead. We can take 1 or 2 questions and then we come to this topic.
Sir, I have one question.
Please.
I have a 9% stake in a private limited company, and my partner is refusing me to realize the value of that 9% stake. He keeps saying, this company has been loss making and we haven't made enough money. How do you want to dilute your stake? If you want to sell this stake to someone outside, you do that. But then how do I find someone who will be willing to take my shares from a private limited company? So I am little bit in a I'm little bit in a confused state of mind, because I really don't know how to realize this value, because this has been a company. We started this company in 2007.
Okay,
and
I understand. I understand. I mean, that's a good question. Maybe what we can do, this question we can take offline.
Okay.
And I will definitely give you a solution. I will definitely give you the answer, how you can go about it.
Sure.
We can take it offline for sure. Yeah.
Sure.
Okay. Very good. Thank you. Now let's come to the module 2. Module 2 is about the very important aspect of a business, and that is basic knowledge, basic financial knowledge. Now, as I was saying earlier, most people tend to think that finance is very difficult to understand. And as I said earlier, I'm repeating, if there is something very easy to understand and learn and apply in life, it is finance, because it is language of money. Now, friends, please remember, we have now about 20 minutes remaining, and this is going to be a series of sessions. So we will close it at 5 o'clock, and we would continue from here in the next session that we have. So do not worry in case we have to foreclose it at 5 o'clock. Now, understanding basic financial statements and what the basic financial statement are, friends. The good news is, for being good in finance, and I can tell you with full confidence, is just to understand three statements. And what these three statements are? These three statements are profit and loss, balance sheet, and the cash flow statement. Are they very difficult? Are they very complex? Of course not. Of course not. We will discuss them one by one, and I will try and explain to you with the help of examples. So first of all, I'm very sure that most of you would be quite well versed with the P&L and the balance sheet and the cash flow statement. But as Usha ji mentioned in the very beginning, that in response to the offer of award, many of the members of Wikiflow responded, but they did not submit the financial statements, and primarily there must be some reason behind it. One of the reason can be not having the system or preparation of the financial statement in the business, and second reason can be perhaps the lack of understanding about these financial statements. So let me start and tell you in brief. Number one, what does P&L tell you? What does P&L tell you? Very simple. P&L tells you as a business how much is the income that you have generated, how much are the expenses that you have incurred, and the difference of the income and expense is either a profit or it is a loss. If the income of your business is higher than the expenses that you have incurred, that means you are earning profit. If the income that you have earned in your business is less than the expenses that you have incurred in your business, it means you are incurring losses. So this is what your P&L statement tells you. But it does not stop there, because for the purpose of decision making, we need to understand profit and loss in much details, and that is what we will do. What does balance sheet tells you? Again, very simple. Balance sheet tells you what are the assets in your business and what are the liabilities of your business. Assets would mean, assuming that you are a manufacturing company, asset would mean that you have a land, you have a building, you have plant and machinery, right? And you have a working capital, you have inventory, you have receivables, you have cash and bank balance. So these are your assets. And what are your liabilities? Liabilities is the capital that you may have put into the company, share capital that you may have put into the company, or the loans that you may have taken from the outsiders, from the bank and the financial institutions, and the goods that you may have purchased on credit. So they all will come in your liability side. So how do you figure out whether it's a good P&L or a bad P&L? You will figure out good P&L and bad P&L based on what is more. Income is more, good P&L. Expenses are more, bad P&L. How do you figure out good balance sheet or bad balance sheet? You will figure out good balance sheet or bad balance sheet depending on what is the figure of reserves in the balance sheet of your company. What is the figure of reserves in the balance sheet of your company? And what is this reserve? Is very simple. It simply means in your business, if you have been making profit and you have been plowing back this profit back into your business, so the amount of profit that you plow back, it goes and sits in the balance sheet of your company as reserves. So जितना आप प्रॉफिट को प्लो बैक करते हैं, उतना आपका रिजर्व्स का फिगर ज्यादा होता है, और जितना आपका रिजर्व्स का फिगर ज्यादा होता है, उतनी आपकी कंपनी की बैलेंस शीट स्ट्रांग होती है. हम लोग बैलेंस शीट को भी डिटेल में डिस्कस करेंगे. व्हाट इज कैश फ्लो स्टेटमेंट? अगेन वेरी इंपॉर्टेंट. कैश फ्लो स्टेटमेंट्स टेल्स यू व्हाट? कैश फ्लो स्टेटमेंट्स टेल यू कि मेरे बिजनेस में पैसा कहां से आ रहा है. कैश इज कमिंग फ्रॉम वेयर ऑल प्लेसेस and where all the cash is going from my business. How do you figure out is a good cash flow or bad cash flow? Very simple. If the money coming into the business is more, money going out of the business is less, your company has a good cash flow. The money going out of the business is more, money coming into the business is less, that means you have a bad cash flow in your company. That means your business is in trouble and you need to do something about to correct it. Right. Now we will start with the P&L statement and understand P&L. So how do we understand P&L? Number one, जब भी हमें P&L को समझना है,
ये चिड़िया सीधी करना, चिड़िया की चोंच इधर कर दो.
Okay, so first of all, understand in case of P&L, we are trying to understand the profit and loss statement. So the first thing what we need to understand is the sales, and sales is also known as top line. And let's say this company's sales is 1,000. This company's sales is 1,000. Why it is called as top line? No rocket science. It is called as top line because the figure of sales is appearing in the top of the income statement, and that is why sales is called as also referred as a top line. From the sales, you minus something which is known as RMC, raw material cost, right? And you also minus something which is known as manufacturing expenses, assuming that you are a manufacturing company. If you are not a manufacturing company, then you will not have a manufacturing expenses. You will only have a raw material cost. Raw material cost, agar aap hai, that means you are a trading company. Okay, so let's say the RMC of this company is 400 and manufacturing expenses of this company is 100. So when you deduct 400 and 100 from 1,000, what you get in your hand is 500, right? 500. This 500 is known as gross profit. This 500 is known as gross profit. Some people call it as gross margin. Some people call it as gross profit margin. Some people call it as gross value addition. Some people call it as gross contribution, or some people call it as gross value. Okay, gross contribution. So they all mean the same thing. They all mean the same thing. You call it gross profit, gross margin, gross profit margin, gross value addition, gross contribution. They all mean the same thing. So now what you do, from the gross profit, you minus something which is known as SG&A. SG&A is selling, general and administrative expenses. By the way, raw material cost and the manufacturing expenses put together are also known as COGS. Okay, so please pardon me for overwriting. COGS. COGS is cost of goods sold. Now, what does it mean? It means from the figure of sales, if you minus the figure of cost of goods sold, what you get in your hand is your gross profit or your gross margin. From the gross profit, you deduct the selling, general and administrative expenses. Now, what these expenses are? These expenses are administration expenses, distribution expenses, warehousing expenses, marketing expenses, legal expenses. So basically all expenses other than your other than your COGS will be part of your SG&A, selling, general and administrative expenses. Now let's say this company has the figure of SG&A, which is 100. What you get in your hand is 400. And this 400 is known as EBITDA. It is known as EBITDA. I am sure all of you belong to the business community. Many of you sit on the board of directors of the companies. Many of you are directly involved and engaged in running of the operations. This term called EBITDA, you must have heard at least 1,000,000 times so far. And why 1,000,000 times so far? Because this number called EBITDA is very important for any business, If you want to control, if you want to have a good control on your business, you just need to focus on this one number. And I can tell you, your business will remain in control. And that is how world over, the CEOs, CFOs, the chairman, the managing director, the board of director, every one of them are always concerned about EBITDA, as much as, I was with this company called ArcelorMittal, and in ArcelorMittal, Mr. Mittal every quarter will send a mail to all the senior team members. I was with this company for 6 years, must have received this mail 24 times. And I would remember Mr. Mittal in every mail that we received for those 24 quarters always highlighted 3 things. Number 1 was health and safety. It was so critical and crucial in our organization. Number 2, he would focus on EBITDA. And number 3, he would focus on deleveraging, debt equity ratio. So that is the importance of EBITDA. We will talk about EBITDA going forward as well. But another thing that I would like to tell you, EBITDA is also important from the point of view of valuation. So world over, whenever companies are bought and sold, one of the factor any buyer of a company would look at is how is the EBITDA of the company. And the valuation will be decided based on the EBITDA. If the EBITDA is good, company will get good valuations. EBITDA is not good, company will not get good valuation. Right. So from the EBITDA, what you do, you minus 2 things. One is depreciation and the other is amortization. Now, what is depreciation? Depreciation, we all know. In the business, we have tangible assets, intangible assets. Because of use of these tangible assets, intangible assets, their values are going down. So reduction in the value of a tangible asset is known as depreciation. Reduction in the value of intangible asset is known as amortization. So let's say again that figure is 50. So what you get in your hand is 350. And this is known as EBIT, earning before interest and tax. By the way, EBITDA is also known as cash operating profit. EBITDA is also known as cash operating profit. And why it is known as cash operating profit? Because this figure of 400 that you have got in your hand in your business, where have you got it from? You have got it from the operations of your business, and that is why it is known as cash operating profit. So from the EBITDA, you minus the depreciation and amortization, you get 350, which is known as EBIT. From the EBIT, what you do, you deduct the interest, which is also known as finance cost. Let's say that figure is 25. So what is left in your hand is 325. This is known as EBT. EBT meaning earning before tax. And it is from this figure, EBT, we will minus the tax. And let's say the tax is 100 rupees. What you get in your hand is 225. This 225 is known as EAT. EAT का मतलब है earning after tax. और EAT का एक और मतलब है, और वो मतलब क्या है? वो मतलब ये है कि अगर आपके बिजनेस में आपके EAT का फिगर पॉजिटिव है, तो आप you can eat in your business. EAT means eat. If the figure of EAT of your business is positive, you can eat in your business, else you can not, right? So this is how you understand P&L for profit and loss statement for the purpose of decision making. Now please remember, it is not a statement alone. ये सिर्फ statement नहीं है. This is the dashboard, or this is the springboard of your business from where you can jump. You can take a higher jump. Meaning what? Meaning, as the owner of the business or the director of the company or the promoter of the company, what I need to do? I cannot look everything by myself. And I cannot look everything by myself. And definitely I cannot look all the things physically. So what I need to do? I need to start a system of budgeting in my business and then focus on few numbers. And what those numbers are, the first number is gross profit. So if I want to have a control, if I want to scale up my business, if I want to take my business to places, if I want to ensure that the performance of my business is good, focus on your gross profit. Focus on your EBITDA. Focus on your EBIT. Focus on your EBT, and focus on your EAT. So remember these 5, the gross profit, EBITDA, EBIT, EBT, and EAT, they all are your business drivers. तो ये आपके बिजनेस ड्राइवर्स हैं. अगर ये सही तरीके से चलेंगे तो आपका बिजनेस सही तरीके से चलेगा, और अगर ये सही तरीके से नहीं चलेंगे तो फिर आपका बिजनेस भी प्रॉब्लम में आ जाएगा. So this is about the P&L. Now, friends, with this we can come to the I would come to the close of what I have to share with you in this session. And as I said, remember, it's a continuing series that Usha ji has planned, or Fiki Flow has planned. We will have the next session, which you will get to know in due course. My recommendation to every one of you would be, now that you know what all we are going to cover in this session, build your questions, build your queries. So next time when we have this session, whenever, we will first address your questions and queries, or I will ensure that in the course of the discussion, your questions and queries are taken care of, so that this program helps you directly. Right? So with this, I put a stop to what I have to present to you, because it is already in my watch 4:57. 3 minutes हमारे पास में है. Usha ji, I am now handing over it to you, so you can please take it from here on. Thank you so much to every one of you. Thank you for your patience hearing, and over to you, Usha ji.
Yeah. Thank you, Pramod ji. It's a very useful and hands-on. I mean, it is very hands-on information for all of us. I mean, we are really very happy. And actually, our chat box is filled with many questions. I think maybe we will compile all the questions, and then we'll post the next session. And
Sure.
somebody was asking about when is the next session. We will come out with the dates very soon. And now I ask Neha Reddy to give vote of thanks for this session. Neha, please.
In the words of Benjamin Franklin, an investment in knowledge always pays the best interest. Today's session was truly an investment in the future of women-led enterprises. I, Neha Reddy, on behalf of the Flow Women Directors Initiative, take this opportunity to sincerely thank everyone who made this session a meaningful success. Our deepest gratitude to our speaker, CA Pramod Jain. Your ability to simplify the language of finance and compliance was both enlightening and empowering. Thank you for sharing your time and knowledge so generously. To our National President, Ms. Poonam Sharma, thank you for your visionary leadership and unwavering encouragement for initiatives that build capacity and confidence among women entrepreneurs. To our dynamic lead, Ms. Usha Rani Mane, thank you for conceptualizing and driving this series with such purpose and passion. A big thank you to my fellow team members, Shobha Jolly and Sujita Reddy. It's a privilege to work alongside you. We also extend our thanks to past Flow Chairs for their continued support, and to our IT team for ensuring the smooth and seamless execution of today's virtual session. And to our wonderful audience, thank you for your active participation. Your presence today reflects your commitment to growing as informed and confident leaders. As we move forward with more such sessions every quarter, let's continue to empower each other with knowledge, ask the right questions, and never hesitate to step up and take our rightful place at the table. Thank you once again, and we look forward to seeing you again in the next session.
Thank you. Thank you. Thank you.
Thanks to all of you. Thank you.
Thank you, Pramod ji. You were making it sound so easy, and so much effort from your part to be talking for 2 hours continuously and in such a trying to simplify for us. And I'm sure these even the next session is going to be as successful as this one has been. Thank you again. Namaskar.
Thank you so much. Thank you. Thank you. Thanks to all of you. Thank you. Thank you.
Thank you, Poonam ji. Thank you so much.
Thank you all
for giving me opportunity to conduct this session.
No, it's a wonderful session, Usha and Shobha, and I'm sure the other sessions will be as interesting. I had to leave for 10-15 minutes in between because there was some meeting which got preponed, and I'm looking forward to looking at the recording and YouTube so that I can go over it again and again. Yes, you were right. Like you said, this is knowledge which you have to visit again every time you see it. There is a new interpretation and new knowledge coming out from it. Thank you so much.
Thank you, Poonam.
Thank you, ladies.
Thank you.
Bye-bye.
So I had one question. If I want to see it again, hear it again, where can I do that?
We will be uploading this session in YouTube, and we will share. Please be in that group only. We will share the YouTube link.
All right. Thank you.
We know very well that it cannot be absorbed in 2 hours time, whatever information he has given. I think whenever we need to revisit this session. And also we are going to do another 3 sessions. Flow Women Directors Program, we are going to conduct every quarter. And before that program, we wanted to conduct this session. So this will be a primer session for the Women Directors Program. Definitely it will, you can catch up there in that program. And our first batch is almost full, and we are open for second batch. And we will be sending the information maybe within a week for the second batch. Please enroll for IOD program too.
Okay. And the session which is going to be continuing after today, that also we'll get it in the mail, that when is the next session?
Yes.
All right.
It will be in the mail.
Thank you. Thank you so much.
Okay, right.
Please post all your questions in the group. We couldn't take Q&A.
Yes, yeah.
Questions in the chat group, please repeat them in the group as well.
Yeah. Thank you. Thank you.
Thank you.
Thank you. Bye-bye, all of you. Bye.
Joyce,
have a good evening.
Thank you, Suguna. I could see Suguna, Joyce. Thank you. Yeah.
Equally at Diva, Mumra and Kalwa. I'm not representing only Mumra, but I'm telling you this is the platform night.
YouTube link.
Absolutely superb session today, huh?
Thank you.
Thank you.
A lot of knowledge.
Yeah, YouTube link you're sending, no?
We will share.
All right.
It may take 3-4 days. But
All right. All right.
Please be there in that group.
Yes.
Yeah.
Thank you.
Okay, right. Yeah. Thank you. And about the next session also, we will be posting in that group also.
Okay.
Right. Yeah.
Thank you. Bye-bye.
Bye.
Thank you. Thank you so much. Brilliant session.
Thank you. Shobha, Neha?
Yes. Good. Well done, Usha.
It was very nice.
Yes.
It was very informative, and he is a knowledge bank. It's only up to us how much we take.
Yeah, and we've asked him to be very catering to people with the basic fundamental questions, right? So that's why he's, addressing that first.
Yeah, exactly. Yeah.
Yeah. And I mean, this seems very, very, I get intrigued in all these topics, but he was explaining it so nicely that full 2 hours, I was like totally devoted. I wanted to learn more. It was really nice. Really nice. Thank you so much.
So, Shivani, from which chapter are you?
Mumbai.
Mumbai.
Good.
Yeah. Okay.
Okay.
Thank you. Thank you.
Okay.
Bye-bye.
Hi, Kinnari.
Hi, Saguna ji. Hi, Shobha. How are you doing?
How are you?
It's a long time.
Yes.
Brilliant session, Usha ji. This was really nice. Though we know so many of it, but the way that he explained it was like so simple.
Yes.
Yes, for beginners and people who are not knowing all this.
Already in the business. See, there are many, of course, I'm in the business for last so many years, but there's so much to know.
Yes, we forget also.
We think that we know, but all these things
so many key takeaways, so many. I think even if we take home 15%, it's more than enough.
Exactly.
Yes.
The investment
Flo will not upload all these programs in YouTube, but I requested Poonam ji that because this type of program should be available. It's very difficult to absorb.
Remember it.
1 or 2 hours.
Absolutely. Yeah. And me being in finance, this session was, it was like so easily explained that I think a person who's just starting off, uske liye bhi it was like.
Yes.
Exactly. Actually, my intention is that only, Kinnari. When I did that MSME awards, there are so many people who have applied, but very basic fundamental documents they could not understand.
Absolutely.
Yes.
Absolutely.
They
That's
were
so
doing
true.
very well in their business. and they're very enthusiastic.
Yes.
So then
Yes.
I thought, I think this need to be addressed.
So that's
Absolutely.
how platforms like these help women, because they say so much, but basics, financial knowledge nahi hoega, so,
You can't be a business person.
Exactly. By the way, I've done that Flow Women Directors program. I'm an independent director.
Yeah, so both of us.
Yes, actually, even Shobhaji, correct.
So
Yes.
what I'm thinking, before every master class, we wanted to conduct this class.
Absolutely.
That's
It's a good pre-teaser.
Yes,
Yes.
exactly.
Nice.
Thank you so much.
All right, thank you.
Shobha.
Have a great
Thank you.
evening.
Bye-bye. Bye, Usha.
Thank you, Neha. I think she left.
Bye, Ushaji. Bye.
Bye. Yeah.
Congratulations once again.
Thank you.